Welcome to another video, guys. This is King Helks, and we shall be continuing with our forex trading course, specifically the technical analysis series. In the previous video, we talked about the science of candlesticks, so I believe everyone is fully knowledgeable on what we talked about and is ready to go forward. So before we go any further, I want to say that every single thing I'm going to be showing or teaching in this series is not, none of the credit belongs to me, right? I need to clarify that like real well. Every single thing is credited to Michael J. Huddleston, the inner circle trader. He's the creator and founder of the ICT strategy, which is what I'm going to be teaching you guys from this point forward. So if you're new to the markets, I just need to clarify that there are a lot of strategies out there. There's support and resistance, there's supply and demand, there's blah 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 this, there's blah 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 that. And if you want to learn any of those other strategies, you can go right off and go and learn them right now from this point on. But if you're going to learn ICT, then you have to stick to ICT, right? Because when I come to talk about trading psychology, you realize that hopping from one strategy to another is not going to do you any good as a trader. But if you're able to focus on what I'm going to be outlining in this teaching, because I'm doing my very best to kind of show you guys what you need to do, right? I'm not going to skip something I feel is important or something that has helped me in my journey. So I'm going to basically pick the things that I know were kind of important to me, right, in setting my foundation, the thing that made me profitable, right? Those are the things that I'm going to be showing you in this series, essentially. So if you're with me, then stick to ICT, put in the time on the charts, work on being able to see all the things I'm going to be talking about after every single video, right? When you write down a couple of things on your notepad, go to the charts, I will talk about that later, but go to a particular pair, look at it very well, try and be able to outline every single thing I've talked about, right? And if you think you're wrong, go back again, watch the video, check where you think you might have gone wrong. So we're beginning ICT strategy right now. Welcome. So in this video, we're going to be talking about price delivery. So we've already gone over the foundations of trading, things you need to understand. We've gone over candlesticks, right? We talked about how candlesticks form the charts. Now we know that essentially what we're doing as forex traders is we're trading difference in prices. We trade when we expect prices going higher, we trade when we expect prices going lower. So it's essential that we understand how price is delivered, right? Because price is being delivered actually. So how price is being delivered is by the interbank price delivery algorithm. So it's important that you know that this price, right, like example GBP USD or whatever pair it is you're on, it is not, I know you see a lot of strategies out there talking about how it's buying and selling that's moving the market up, moving the market down. No. But in ICT, right, we've come to understand that about 90% of these market movements is all being controlled by an algorithm, right? So there's an algorithm that is being written by these people that we call the market makers, people that are behind the scenes, right? So they are essentially in the ones behind all these price movements. So there's an algorithm that's moving price. So they are the institutions. So actually what we're doing in ICT is that we're trading the way the institutions do. So you might get a lot of hate when you go and tell people that, I'm trading the way institutions do. They'll be like, no, you're a retail trader, you're not trading the way institutions do. Well, I mean, whatever, as long as you're profitable, all that. The people that argue the most are people that are not profitable in trading. Most people that are profitable is either they really don't have anything to do, or you won't find them arguing such things, right? So essentially, as an inner circle trader, as someone who trades ICT strategy, you are an institutional trader because you're trading the way the big banks do. You're trading the way the people that have written these algorithms are trading, right? So now, how is this price delivered? So this is our continuation, our second part in technical analysis series. Now, this IPDA, which is the interbank price delivery algorithm, right, delivers price within a particular framework, right? So it's usually within these 14s. Whatever it is that's happening on the charts, it's always these 14s that's going on: consolidation, expansion, retracement, or reversal. Sorry, I'll fix this now. Alright, so these 14s: consolidation, expansion, retracement, or reversal, at any time in the market, right, price is doing either one of these 14s. Price is either in a consolidation, or expanding, or retracing, or reversing. That is how price is being delivered. So this is the framework that you need to keep behind your head, at the back of your mind, that at any point in time, price is either consolidating, expanding, retracing, or reversing. So now, what exactly is all this? Let's dive deeper into these frameworks. What exactly is consolidation? Now, consolidation, this is when price moves inside a clear trading range and shows no willingness to move significantly higher or lower. Let's jump into the charts. Let me explain this. So just hold this definition one more time. This is when price moves inside a clear trading range and shows no willingness to move significantly higher or lower. Alright, so we're on the charts right now, and what I'm going to start doing is I'm going to start outlining consolidations, right? So hopefully your eye will be able to see them. So we say when price moves into a trading range and shows no willingness to move higher or lower, over here, right, this is consolidation, because now we're on the 1 hour time frame, as you can see here, right? So like for hours, price was within this range and it was not going higher. Like this was the highest it went, right? Okay, this was the highest it went, right? And this was the lowest it went. For hours, it was within this particular range here. Now, what do we have here again? This is also consolidation, right? Because for hours, price was trading within a range, went up, come down, went up. It did not break this particular range, so we're basically trading within a particular range with no willingness to go higher or lower than it, right? This over here is also a consolidation, right? So as you can see, all this while for hours, so it does not necessarily have to be for hours, whatever time frame you're on, right? But now, because we're on the 1 hour time frame, so you can see that price was trading within a particular range, which is this range, right? And it was not going higher or lower than it. It was just trading within that specified range. So we can keep going and we'll keep seeing things like this. Over here, it's also a range, and low and high, but it was still within this particular range. So that's also a consolidation, right? This over here, it's also a consolidation, right? See another consolidation. So you can see that this thing is all over the marketplace, right? It's all over the marketplace. In between here, another consolidation. We can even say from this point to this point, right? So consolidation, like it's everywhere. So can you spot another consolidation in this particular image? Oh, so it's everywhere essentially. If you come over here, right, in between this range to this range, we have a bit of consolidation over here, right? So price was trading within this range, showed no indication to go higher or lower, right? So anything that looks like price is accumulating in one particular place, like all this, it's essentially accumulation. See all these, price was not going in a specified direction, it was just ranging. So when we see price ranging, that's what we call a consolidation. From this point to this point, price was not going in a specified direction, we were just basically trading within a particular range. So all these let me zoom out. All these that we've outlined, all consolidation. Can you see now that we zoom out how in all these things you can see that there are some other sharp movements, but these ones, they were actually trading within a particular range, trading within a particular range, trading within a particular range, right? So your eyes will just have to get used to this particular thing. Now I am going to come up a little bit and tell you, when we start diving deeper into our strategy, at what times to expect some of these things, right? So but for now, let's move on to the next thing. All right, so the next thing we have is expansion. This is when price moves quickly from a level of equilibrium. Now what do we mean by equilibrium? When we were consolidating, right, essentially price was within equilibrium, like we were not going higher or lower from a particular price range. That's what we mean by equilibrium. So when we're in consolidation, we're in equilibrium, we're not actually going higher, right, or lower. So this is when price moves quickly away from this level of consolidation. So let's jump into the charts and see that. All right, so we've already marked out consolidations here, right? So now let's start marking out expansion. We said this is when price moves quickly from a level of equilibrium. Now this is essentially our level of equilibrium, this consolidation, right? Now do you see how price moved quickly away from it? So now let me use a different color for our expansion, right? Let me make it brighter. So let's just create a bit of a key over here. Let's create a key. So this represents what? It represents our consolidation, right? This represents, okay, this represents our expansion. All right, this represents expansion. So let's keep outlining this. All right, so consolidation, then we have expansion, right? So let's go to the next level that we outlined as our consolidation. What do we have? Sharp movement away from level of equilibrium, right? So that's an expansion, right? Level of equilibrium, consolidation, right? So what do we have? Expansion. So you see how I said at any time of the market, price is doing any of those four things, and it is two already. So consolidation, expansion, consolidation, expansion, consolidation, expansion. So I don't want to be using all the random ones that are clearly being seen in the marketplace. I just want to use these examples that I've already outlined for the consolidation, just keep it simple and fresh, because I don't want to overwhelm you guys. You guys are probably like, but everything is looking all the same, like how do I identify this consolidation and everything? Don't worry guys, let's keep going. So this is expansion, right? Because that's a sharp movement. What do we say characterizes expansion, right? A quick movement, sharp movement away from this level of consolidation. So what do we have over here? Another expansion, right? So consolidation to expansion, consolidation to expansion, consolidation. Even over here we have an expansion, right? See over here, essentially all these things, right, can be said to be consolidation, because if you look at it from the broader point of view, right, if this was an expansion, price did not actually trade beyond here or beyond here. We were essentially ranging. So all this is what? All this is consolidation, we can see, because we didn't really go that far. Or we can break this down into fewer chunks. This is where trading begins to look complicated, but if you are willing to sit through these guys, believe you me, it will make sense. It will make sense, right? So this is another level of consolidation, right? So we can call this expansion because to a certain level price did trade in a particular direction, right? You can call this an expansion too. And we went back into another consolidation. So are you beginning to see it? Right? Then what happened again? An expansion. I'm sure you're beginning to see it now, right? You can see that after this consolidation, we typically have this expansion, right? So that means price will range within a particular place and then shoot, right? So now, if you look at this from the broader spectrum, right, you can see that this entirely is a consolidation in the sense that compared to this is an expansion, right? But if you compare it to other price movements, all these sharp movements, it's actually a consolidation. So what now happens here? Right, let's outline this as a consolidation that happened before what? An expansion. See this move, an expansion, then went back into consolidation, expanded. What happened here again? We consolidated. And then what happened after consolidation? We expanded. So I'm sure your eyes already seen it now, right? So let's go further and finish talking about all the four framework in which price is delivered, and then I'll come back and show you a bit of something towards the end of the video, right? Alright, next is retracement. This is when price moves back inside the recently created price range. Now we were in a consolidation, right? Then when expansion came, what happened was that we quickly moved away from that level of consolidation, right? So we created a price range, right? That price range is from the point at which it left consolidation to the point it reached, right? That's the expansion. So now this retracement is when price moves back inside that recently created price range. Let me explain this on the charts. Alright, so look at this. This was consolidation, right? Now let's zoom in a bit here. Now we can say that this alone was an expansion, right? But now what do you see happen? This is basically the trading range that we created. These are range high, these are range low. Let me outline it. These are range high. Just stay with me, don't get overwhelmed, stay with me. So this is our range low. So this is basically the range that we created. Now, what do we say the definition of retracement is? This is when price moves back into the recently created price range, right? Now what happens? This is the price range we created. So this is our range, this expansion, this orange over here. What happens? Price now moves back into the range because this is the range and price went back into the range. So what's this? Retracement. So let's go update our key. Let's give this another color. So green for what? Green for good. Green for retracement. By the way, I'm using control to duplicate. I will hold down control and then I will now click and drag on the object. That's what I've been using to duplicate, in case you're wondering. You can go check YouTube videos for tutorials on TradingView. So retracement, right? So let's keep going. If you come over here, what do you see? This was our consolidation, right? Let's say this sharp movement that created this range, this one over here was our expansion, right? But what do you see happened after we created this range of expansion? What now happened was that we moved back into that range. So this is what our retracements, right? Now look at this again. These are expansion. See what happened over here. We move back into that particular range that was created. So let's move this over here. Let's move that, right? So over here we have what? A retracement. All right, so let's keep going. Let's keep going. Now what do you see after this expansion over here, right? Price move back into this particular range that we traded, because these are range low, these are range high, and price move back within the range. So this is what? This is our what? Retracement. Now what you have to understand about technical analysis is that you should not come to the charts and expect that you see it always like this, that after consolidation you want to see expansion, then you want to see retracement, right? So always price is being delivered like this, but you're not always going to be able to see it in that particular way, right? Because now see over here, what do we have? We have an expansion, but we don't see a retracement, do we? No, we don't, because instead price just goes the other way, which brings us to our next, the fourth and final framework in which price is delivered, which is reversal. This is when price moves the opposite direction that the current direction has taken it. Okay, so this is when price moves in the opposite direction of, right, of the current direction. So imagine we have that expansion, and then we now start going in the opposite direction of that expansion. That's what a reversal is. Let's jump into the charts. So over here we clearly see a consolidation. We see an expansion away from our level of consolidation, right? And then now what do we see over here? We see that instead of retracing into this range and continuing going, right, what do we now see? We see a reversal. So let me outline this in no, that's too similar. Let me use this, right? Now we see that after expansion happened, we now went the opposite direction of that current direction, that previous direction. So this is now called a reversal. Let's update our key. So this is for reversal. All right, so let's keep looking for reversals in this marketplace. Now we have a consolidation over here, right? We have an expansion, we have consolidation, we have our expansion, right? We have our what? Okay, so look at something over here. This was actually the expansion, right? This was the expansion, and then instead of a retracement into this recently created price range, what do we have? A reversal. So over time your eyes will be able to recognize all these things, right? So this is our reversal, right? Good. See another one here again, right? This is our range, right, that was created from the expansion, but instead of retracing into it and then continuing going lower, what do we see? Price went the opposite direction, right? So this is our what? This is our reversal. Okay, so let me zoom out so that perhaps if you want to take a snapshot, you can go to your chart, try and outline consolidations, try and outline all of this stuff. So consolidation, expansion, retracement, reversal. Finally, the thing I wanted to show you guys, let's hop on back to my presentation and I'll show you what I wanted to talk about. Okay, so towards the middle of this series, I'm going to show you guys how to identify where and when to expect consolidations, expansions and retracement, right? Because now it looks so random and you're probably thinking, when will I come to the marketplace? How will I be able to see a consolidation and expansion and retracement? So for now, go to your chart, try and be able to outline consolidations, expansion. Let your eyes just be able to see them, right? And then towards when we go deeper into this course outline, I will show you we're going to be treating something called time and price. We're going to be talking about forex sessions, and then during sessions you're going to see when to expect consolidations, when to expect expansions, when to expect retracements. Now keep in mind I say expect because you can expect but that doesn't mean it will turn out that way, right? So for now that's it in this video. I'll see you guys in the next video.